Walgreens agreed to sell itself to Sycamore for an enterprise value close to $20 billion. I'm joined today by Jean-Yves Coupin, Bloomberg Intelligence high-grade healthcare credit analyst, and I'm Julie Hung, Bloomberg Intelligence consumer credit analyst, here to discuss the transaction and the potential impact to bonds. JY, WBA bonds have moved up following the LBO announcement, which is counterintuitive to LBO deals. What happened and why?
You're right, Julie. Walgreen bonds have appreciated in price, especially the longer dated bonds. For instance, the 44s have gained close to 10 points since the LBO announcement. This would sound like a counterintuitive move given the $12 billion of debt that is needed to fund the acquisition if investors didn't think bondholders will be protected by the change of control language of these bonds, which basically says that in the event of change of control and a downgrade of the ratings further into high yield, then bondholders will have a right to put their bonds to the company at a contractually agreed price of 101. So obviously the $1 million question is how much protection is there for bondholders? And that's where the focus turns to the rating agencies.
And given your background at Moody's, what is the potential time frame for the rating agencies to complete this review for downgrade?
Well, the short answer is as soon as possible. I think by placing the ratings under review, the raters are basically telling the markets, in simple terms, the current rating is no longer the right one, and we don't know where the right rating is currently. That said, in my opinion, it will take some time and more likely to be months rather than weeks to resolve this review. And here is why. Number one, because of the existence of a go shop period of 35 days, in other words, another buyer could emerge, I think the rating agencies will wait to resolve their review. Do we think this is likely and another buyer will emerge? No, I don't think that's the case, but I would be really surprised if the rating agencies were to react within that time frame. Number two, I think the raters will need time to review the capital structure and future plans of the company. And what are they going to focus on? I think firstly, they will have to look at where the debt will be located within the group. What are the plans to turn around the business and pay down debt? What assets could be sold or will be sold, and what's the time frame for that? So for all these factors, I think they will have to be taken into consideration by the lead analyst before he or she can form a view and convene a rating committee to resolve the review for downgrade and assign a new rating.
And is there any way Sycamore can prevent this change of control language from triggering?
This is a very interesting question. I think Sycamore will try its best to avoid having to refinance the longer dated bonds. I think for the shorter dated bonds, I think it's fair to assume that they will be taken out to provide some liquidity runway for the company. However, for the longer dated bonds, I believe there could be a path to avoid triggering the change of control clause. And here is how. If we just set aside, challenging the way the change of control clause language is worded, there've been precedents, but I'm not a lawyer and I want to opine on that. But I think the other way to do it simply is to structure a transaction in such a way to avoid a rating downgrade, especially within 60 days of the effective change of control. Certainly not easy given the large amount of debt, but I think with a combination of asset disposals and aggressive cost cutting, especially to reduce operating lease burden, I believe that the US business of Walgreens could support leverage, let's say between sort of 5.5 and 6.5 times within a time period of 18 to 24 months. And that could, in my opinion, limit the rating downside to one notch. Now, if Walgreens then provides guarantees to these bonds to bring them up within the capital structure, and these bonds are currently unsecured, then it's not inconceivable that the rating on these bonds could avoid being downgraded. So in a nutshell, I think it's not easy to do, but I think there could be a path there.
Great. Thank you so much, JY, for your insight. For more information, please refer to JY's research on the Bloomberg Terminal. Stay tuned for additional updates on Walgreens, and thank you for joining us today.